Lucid stock update. Okay guys, we have a really important video here, a big up. So something recently happened with Lucid Motors. The price decreased past a huge milestone. So we're going to talk about it in this video, guys. So if you guys enjoy my content, please smash the red subscribe button and smash the like button as well. And be sure to check out some more future videos, guys, because I know a lot of people are panicking. Okay, I've been reading the comments in YouTube. A lot of people out here have lost almost everything or down 50% or more on some of their positions. As you can see here, if you guys ended up buying Lucid during the pump, I mean, you're down quite a bit. So we really need to talk about things here, kind of figure out exactly what's going on with Lucid Group and what's moving forward. So I hope you guys enjoyed this video. So if you guys didn't know, today Lucid basically crashed below the $15 level. So why is this so important? Well, if you guys weren't aware, Lucid, when the SPAC deal was originally released, the deal was at $15 a share. Okay, now normally a SPAC is at $10 a share, and as you can see, back when it was CCIV, it opened at $10 a share. But the reason is that the private investment, the demand for Lucid was so strong that they had to open the deal at 15 cents, $15. So all of those people that initially got in with the PIPE, the private equity investment deal, they're now in the red, as you can see here, assuming they held on to their shares. I mean, maybe they dumped them, but we know that we're under the $15 level. So that was like a key long-term support level. And this is not just Lucid, okay? Tesla was down huge. I believe Tesla was down around 8%, okay, on Wednesday. This was just a really ugly day for EV stocks. All the EV stocks got crushed. Tesla, Lucid. Actually, Rivian did well. Rivian had a good earnings release, but most of the, all the EV charging stations, Volt, ChargePoint, all those got crushed. It's been really disastrous year for EV stocks. As you can see here, Lucid is down 64%. So what does all of this mean? Well, looking here right now, Lucid is now trading at a market cap of around 23 billion, yet the company hasn't really delivered that many cars. So this is a bit worrying, okay? My average cost for Lucid is in the low 20s, around 20 or 22. Seeing that it's at a $23 billion market cap with probably not going to do more than 12,000 to 14,000 deliveries, things look a little uncertain, okay? We're dipping below $15. We're headed towards 10, it looks. What am I going to personally do? Well, me personally, I'm going to be buying more under 15. Now, it looks like the market has recovered a bit in after hours. So if we take a look at that, okay, if we take a look at futures, the futures are green, and that makes sense because there was a lot of panic selling after the inflation news was released. So we're sitting at around $14. So a lot of people are kind of wondering, what do I do if I'm down 50, 60, 70%, depending on what you guys bought in, okay? Well, remember, if we guys remember kind of what happened to Tesla, Tesla was the company that basically was trading at a low level, and then when their demand kicked up for EVs, that's when the stock skyrocketed. So the good thing about Lucid is that the cars are selling at an average price of around 100,000, okay? The product is much more expensive, and they're going to be raising prices. So this is another good thing, guys, because what we want to see with Lucid is we want to see revenue, okay? We've been waiting quite a long time, for you guys that have been there since the CCIV days. We basically had the initial run-up, the pump, and now we're back at the dump. So now, if we're trying to look, we're looking at the accumulation, the run-up, the distribution, the run-down. So now we're back. We've completed one whole market cycle, and now we're kind of back where we started before there has been really any production. So for some of you up there that were trading this stock, congratulations if you met it, but if you sold it. But if you're holding like me, then you want to see, obviously you want to see deliveries, you want to see production. So we have some good news coming out of Lucid's campuses. Lucid Eyes launching luxury EV sedans in Europe. So the company is expanding to Europe. They're going to start selling their EVs in Germany, Netherlands, Switzerland, and Norway. So this is great. So this is all part of Lucid's plans to go international and basically sell their product all over the world. Now, we've been waiting a long time, but we do know that in Europe is well known for its luxury cars, okay? Lots of luxury car manufacturers over there, Lamborghini, etc. So we know that the demand is going to be pretty strong because this is the #1 EV car in the world right now. So you know, why the reason I'm holding Lucid is simply because I'm kind of using the same mindset that with Apple. Apple is, you know, arguably makes the best smartphone in the world, and they're one of the most valuable companies in the world. So a company with great products and customers that love those products should do well over the long run. So this is my rationale. Now, I know there's a lot of uncertainty right now. People are dumping their shares thinking, okay, it's overvalued. You know, it's trading at an extremely high price to sales ratio. The company is yet to generate revenue. If we were to take a look at the price to sales ratio, it's 495. That's going to scare away a lot of people. So how low can Lucid go? Well, we do know that it has a huge majority stake is owned by the PIF. They have around 61% of their shares. If they start dumping shares, things could get ugly quick. But the good news is that Lucid has a pretty solid cash base. Okay, they're holding $6 billion in cash. So, you know, that is definitely a very, very positive sign. We know that it's pretty much unlikely that Lucid is going to crash, you know, way down into like something like, you know, $3 or $4 like you see in some of these other EV stocks, just based off the cash balance. Okay, they do have some debt, but they have plenty of liquidity. And, you know, the fact that they're raising prices for their cars, they're going to be charging more money, just like Apple does. Apple is flush with cash because they're able to charge a lot of money for their products, and that's what we're seeing with Lucid. Lucid is not trying to compete by lowballing its prices like Tesla and the other companies have. They're really trying to charge more. So the more they charge, the better their margins are going to be, and they're going to have more cash on their balance sheet, okay? So one of the bad things is that Lucid has been a heavy short target. As you can see here, is a pretty high short interest. So that is something to take into account. That's one of the reasons why these shares have been selling off so much. But what we're looking for here is we're looking for production. Okay, I'm going to be jumping in here, picking up some more shares, lowering my average cost. Like I said, this is just a waiting game. You know, as long as the company is going to be making deliveries of around 12 to 14,000 this year, they still don't have the Saudi factory built out. There's a lot of growth that needs to come, but I am pretty certain that for the people, if you guys were around back when I was in high school, we were making the transitions from kind of like those old school Nokia phones, from cell phones to smartphones. And the companies that led that transition, right, mainly Apple, Microsoft, and things like that, you know, companies like Samsung, they became rich. So that's the logic we're moving from ICE, gas guzzling vehicles, to EV vehicles. The companies that are leading that charge are going to attract those dollars. So that's kind of our rationale here. So for me, I think this is a buying opportunity, okay? The price could dip lower though. Be prepared for more losses in the short run. This is not a short-term investment, okay? If you want to kind of hedge your position, you can always buy puts. That's something that I'm doing as well. I'm doing more of that. And Robin, I'm going to make a quick video on my update my puts in my upcoming video. But just realize that you don't just have to sit there and watch your portfolio bleed out. You can sell puts against your positions to hedge, or you can sell covered calls as well to generate income. I'm going to talk a little bit about that. I'm going to make another options tutorial show you guys in the next video that I'm going to make. I'll show you guys how to do that. So I just wanted to give you guys an update on Lucid. I think to wrap things up, under $15 is an excellent buying opportunity. We've broken down support. We're reaching those previous CCIV levels. This is the time to buy, not here. This was the time to sell. This is the time to accumulate shares, really build a position, because at the end of the day, this is arguably the #1 EV car company potentially in the future. We're seeing how Elon Musk is kind of diverting his attention away from Tesla. He's moving on to other projects, his SpaceX, his Starlink, Twitter. So it's pretty obvious that Tesla's probably not going to be in Elon Musk's future. Because look what happened with PayPal. He moved on from PayPal. So this guy has a habit. He kind of he's a brilliant entrepreneur, but he's also very ambitious, and he likes to get involved in many different things. So the good thing about Lucid is that the CEO is focused just on one company and focused on making the best EV in the world. So that's going to translate into a lot of shareholder value. So I hope you guys enjoyed this video. If you guys enjoyed this video, please smash the subscribe button and get more updates, and hit the like button as well. And hey, check out my Twitter, guys. Be sure to subscribe to me on Twitter. That link is in the description below. I post a lot of updates on Twitter. I don't always get a chance to post a video. So that's it until next time, guys. Take care.